Good morning. My name is Luke Rankin. I am the Vice President of Defender Capital Management. And today we kind of just wanted to give some of the outsiders a little look at a decision we recently made regarding the company Tesla. Tesla is a company we've held for a little under a year. And the club got into really good discussion about Tesla as a company versus Tesla as a stock. We thought just giving you guys a little more of an insight into a little bit how our meetings go and how we kind of went through this process of deciding what to do with our Tesla stock. So let's get into it. As you can see, we bought Tesla February 2nd of 2024. I think one thing to take into account is as an investment club, we are not subject to a short-term capital gains. Otherwise, I think this would have came to an entirely different decision. Yes, we are not like the general investor in having to pay those. When we first bought Tesla, we bought it 132 shares for $189, and as you can see, those same 132 shares are worth upwards of $400, giving us an over $30,000 gain in a little under a year. And that being said, out of our current entire portfolio of around 35 to 40 stocks, Tesla currently has the 8th greatest percent change out of current holdings. So that essentially puts into consideration stocks like Apple and Amazon, things like that that we've held for a long time. We've received the 8th greatest change out of Tesla, which is incredible given we've held it for less than a year. So going into it a little bit, I first wanted to, when I made this presentation, get into a little bit of why we bought Tesla in the first place. I think understanding our initial thesis is super important and seeing if that still stands true today. So Sam was he was kind of the spearhead of why we should buy Tesla in the first place. Hats off to him. In a couple paragraphs he said in our buy recommendation, he said, in all of our Excel valuations, Tesla's heavily undervalued. We're confident in their continued delivery numbers to go up as the US government continues to incentivize buyers to purchase EVs. This has basically been depositing money into Tesla through tax incentives. We're looking for high growth, high market cap stocks in order to create a more diversified portfolio that will do well should the market skyrocket. DCM consistently loses when the market does well. This investment will help to mitigate that loss. So from here, we went through a little more detailed into what our initial thesis was. We looked at the entire recommendation to see what we thought about the stock then versus what our expectations were for Tesla in the future. From there, I went just into a little bit of a product overview. I won't spend too much time in this, but I do think it is important that even in 2023, Tesla still generated over 80% of their revenue in their automotive industry. I think in the future that could change a little bit, whether that be through their new robots, the Optimus, or through the robo-taxis. That being said, they do other stuff such as solar energy, energy storage, various energy system products. From there, we went into a little bit of the competition. We saw that Tesla dominates the entire automotive industry. As you can see by market cap, they're just under half. Their market cap just under half of the entire automotive industry, which is incredible, but also a little bit scary in terms of a valuation perspective. And then we looked a little bit at their competitors, and as you can see, they are a high cost, high innovation electric vehicle, and that's super important. One thing we talked heavily about is the introduction of new companies into the EV space, and looking specifically at China. China, a bunch of new EV companies are coming out of China, and essentially they're new vehicles and they're super inexpensive. And we know with Tesla wanting to go to where they want to go, they're going to have to expand into China as a large spot. And something we talked heavily about was whether that's going to be attainable given the incentives that these Chinese companies have to produce EVs and the current support of the Chinese government that favored their EVs in favor of Tesla. So what has happened since then? Tesla has released updated versions of Model 3 and Y EVs. They've continued their autonomous driving innovation. That being said, Tesla in 2024, their sales dropped for the first time since 2011. I think that's super important to note. And I think the question that we should all ask is, okay, so if this happened, why did their price skyrocket? As you can see, the last year, Tesla's went up over 114%, which is far greater than any of their competitors, even given their essentially, I would say, a little bit of a lackluster year. Tesla 2025. So from there, going from where Tesla was to where Tesla's planning on going, the Redwood. If you haven't heard of it, this is Tesla's plan to continue to garner a new market share, a new market audience through their new affordable car. They're trying to appeal to more of the middle class through a car that's supposed to be under $30,000. And I think this definitely has positive and negative implications. Secondly, they're also beginning to continue their production and testing of their robotaxis, starting in Texas and California. They hope to get these launched in 2026. I read somewhere that the robotaxi, as of now, they'll continue to test it, but it won't be fully autonomous. They'll have kind of a teleoperator operating within the vehicle that will essentially help continue to figure out the kinks. Finally, the Optimus. This is their humanoid robot. They essentially, not a whole lot of news here, but they continue to test and produce these. They hope to 10x their production in 2025, as well as 10x that number in 2026. If you don't know what the Optimus is, it's basically a general purpose robot that's essentially supposed to do either dangerous tasks or boring tasks in production lines, things like that. From here we looked more comprehensively at some of the numbers, but here are just a few we looked at. As you can see, the stock price at about $420. They've obviously their PE, price of sales and beta, is super high. It's double any of their competitors, and it's at the extremely high point of where Tesla is historically, which were kind of a few things that we talked about and wanted to make note of. Yeah, and then we looked at analyst expectations across the board. All the analysts think the stock is extremely overvalued. Morningstar gives it a 1 star. And I believe at the time we bought it in February, Morningstar gave it a 4 star. So just looking a little bit at the comparison between the two is important. Obviously, price targets kind of average around $300. And obviously, as I stated earlier, the stock's at $420. So we definitely use that. It's something that we don't take with a grain of salt, but we also don't want to give it too much value and expertise. That being said, these people know what they're talking about, and so we definitely look at it and use it as a valuable resource. Here's a valuation from our Excel model. Honestly, a little better than I thought it would be. Obviously, their cash flow and projected cash flow currently are not where they should be given their stock price. We kind of knew that going in, but I was surprised to see that their actual revenue and earnings per share were better than expected, and their book value there is actually negative 72%. As I said, another tool we use to help give us insight, and even more so to just look at companies that are either over or undervalued compared to our valuation. Now, addressing key points, some of the things that Sam brought up in his recommendation were Tesla receiving much sales through government incentives. Currently, you get $7,500 for a new Tesla or any electric vehicle. The government gives you a tax credit of $7,500 for new or $4,000 for used. Now that Trump's in the White House, he said multiple times that he is first going to eliminate these tax credits, but he's also going to do something different to where companies currently would pay Tesla to give them their tax credits, and that was a large majority of Tesla's overall sales volume, and that's potentially going away as well. These other automotive industries have no incentive to actually produce EVs as well, and I think on the outside, it looks obviously Tesla's sales volume will decrease, especially early on. But our club kind of made the consensus that we think this is actually a good thing for Tesla. We think that with the removal of these incentives, that it'll kind of get rid of some of the lower competitors that are either trying to enter the industry or are not super established. We think customers that are buying Teslas are going to continue buying Teslas. We don't think it was primarily for this tax credit. Obviously, will be some of the customers for sure, but we think Tesla's focus on innovation and their continual decrease in price for their vehicles will eventually, this will be a good thing for Tesla and weed out some of the competitors. Yeah, so then from this evaluation, we decided that our conclusion was to sell our entire investment of Tesla. Obviously, throughout the presentation, we've talked a little bit about the valuation. We've talked about some of their future plans, and our club kind of concluded that we thought the only viable reason to sell Tesla was based on the conclusion that they do something historical, whether that be, we talked a little about them potentially partnering with Uber, with Tesla's robo-taxis. But at the end of the day, we thought we can't hold an investment entirely on speculation. We believe in Tesla as a company, and we'll continue to monitor them. But as a stock, we believe that they're extremely overvalued, and we believe that our money and we'll take our gains and essentially could be used elsewhere. So there you go. That's a little bit into a summarized version into my presentation on Tesla. Is a super good discussion on a company that most people are aware of, and I think it really provided good discussion and good insight on kind of what we do as a company or as DCM, and also just looking at stocks. So thanks, and I hope you guys have a great day.